we are up on the year. And also we have had one of the longest streaks of the S&P recording consecutive 3% gains that we've witnessed in the modern era. So fair to say that the market has certainly tried to put the Iranian narrative in the rearview mirror. Does that mean we need to go back to fundamentals? So if we acknowledge that the forward returns on the S&P near term are going to get skinnier, let us go back to some themes that we're really high conviction on. First and foremost is this commodity theme. And by that, I don't specifically mean oil and energy. I'm referring back to the narrative that this team was discussing as early as December last year around the industrial metal supercycle, and the idea that commodity scarcity and the need for strategic autonomy by different regions is going to continue apace, especially in a world given what's happened with the Strait of Hormuz and the ongoing tightness of the physical markets within the energy space and products. So our highest conviction theme is this industrial metals. The idea being that every economy needs a strategic reserve of copper, aluminium, lead, nickel, zinc, tin, you name it, as well as energy, as given what's happened with Iran in recent weeks. And that's going to effectively drive additional demand for these commodities and, crucially, commodity equities. The scarcity is in the equities itself, given the fact there's only about $1 trillion of market cap in this space, in a global market cap of about $150 trillion. Second thing that we want to touch on is China. China equities have been deeply unloved. In fact, KWEB, the China Tech ETF, had a 31% peak to trough drawdown recently, which was one of the highest on record. And investors have obviously been more focused on other parts of Asia, mainly the memory story out of Korea and the fiscal story out of Japan. China, however, has now become a little bit more interesting for two reasons. Number one, it's trading cheap again, around about 14 times forward earnings for the China Tech Index. Number two, Trump and Xi will be having their meeting in China next month, and we think that's an important catalyst to reset the narrative on China equities and something to give investors focus on, especially if the talk is no longer all going to be about Iran. Third thing, AI and megacaps. Most of these companies are going to be reporting on the 29th of April, so that's one thing that investors will definitely want to be focused on. We've been pretty constructive on megacaps as a function of their derating, and they're still driving the majority of earnings growth in the S&P over the course of 2026. Yes, there is that capex hump that investors still are fretting a little bit about, but the valuation adjustment is too attractive to ignore at this stage. They have begun outperforming the market once again over the past couple of weeks. If S&P returns get a little bit skinnier and investors are looking for more targeted ways to get exposure to North American equities, then the AI story is very much alive and well, being front and center of that narrative. That's your morning matchup with Alty. Good luck trading.